Hello, today is April 11th, and it is the eve of the CPI report, which comes out tomorrow. And I don't think the CPI report is going to be quite as big of a deal as maybe some of the ones in the past. Now, that's foregoing if it's, it's not completely hot or completely cold, one or the other. If it comes in super low and it shows inflation's dropping, obviously that potentially could move the market some, although I'll kind of go into some of my thoughts on that. I don't see the market moving crazy swings to the upside, even if it comes out cooler than expected. But even if the inflation report comes out hotter than expected, I don't think that will completely move the markets like it used to. Now, obviously, if it comes out extremely hotter and it blows it away, that certainly will. But my reasons of thinking that is because, you already had Jerome Powell in his last speech talking about that they were going to raise the Fed fund rate quarter of a point, which they did, and then another quarter point, and they're going to pause it. And I think there was some thought that the second hike might not come, depending on what that employment did, which came out last Friday. Now, the markets were closed last Friday, at least equity markets, but you had the bond markets that were open. And really, when you look at the numbers that came out, they were really right in line of what they should be. I mean, one thing just to note is the participation rate did go up. If we were to look at it, it did go up, and that was a little bit of a surprise. There definitely went up more than what people maybe were expecting. But you look at the employment rate. You can see down here that people thought it was going to be at 3.6%, and it came in a little bit cooler at 3.5, which definitely doesn't help the argument of pausing any rate hikes. The second rate hike that Jerome Powell mentioned. You look at non-farm payrolls. It was a little softer than maybe the consensus thought. It came in at 236,000. The market was expecting 239,000, but essentially the same. And then, you look at the earnings month over month, and it went up about 0.3%. So really what the numbers are telling you is you had some people, I think there's roughly about 3 million people come onto the job market, and they were able to find jobs super quick, probably making a little bit more than they did previously. I would think that, and and the job market still looks strong. So, if the CPI report comes out tomorrow and it's cooler than expected, I still think that's gonna, as long as it's not way outside the range, I think you'll still get a rate hike. Obviously, if it's higher than expected, you'll still get a rate hike. And I guess there's talks about it being maybe a continual rate hikes after that. But we look at the market and see what it's kind of done and where we are. So here is S&P 500. You can see we're in just kind of this oscillating triangle. It's just kind of going up and down, up and down. This does look like that if this pattern continue, this is where it would start going down, which is a possibility because, when you look at the VIX and see where the VIX is extremely low considering the CPI reports coming out tomorrow. And the pattern, at least the past couple of years, is that the VIX would you would have implied volatility higher, and then the CPI report would come out, and maybe it was in line, or maybe it was a little cooler than expected, and then you would see the volatility melt, kind of like right here. It would just start melting during the day, and that would drive the market higher. You would get these rallies, but when you look at it, I mean, it is down here, really kind of the lowest of the lows. When you look at really since all last year, really to go back to 2021 and see it, see it significantly lower. So that's why I don't think that if the CPI report comes out, even if it's a little bit cooler, there's not a whole lot of room for the volatility just to go anywhere because it's already low. So I don't see the market just jumping crazy if it comes in line, or even if it's just a little bit cooler. Again, different story if it's showing the inflation is basically just melted away, but I don't think that's going to happen for a couple of reasons. One, when you look at, let's start with oil. When you look at oil, you see oil prices going up, which obviously means gasoline prices have gone up. So you can kind of see this big drop off in March, but then you see a steady hike. But gasoline prices have actually stayed decently high, and it looks like oil is ready to be to break out right here and go higher. You look at something like copper, you'll see that copper is still relatively high. It's kept up there, especially when you consider where it was like in the fall. So this is, higher gasoline, higher copper. That's going to drive prices higher. And then we just look at a general commodity index. So this is calm. You can see it really in March start to come up here, and you look at where commodities are today, which really wouldn't matter for the CPI report. But you can see, at the end of March where it is. It's right in line at the beginning of March. So we'll see what happens. I don't know where it's going to come out. My thought is probably going to come out right where it's expected. I don't see it being extremely hot. I don't see it being extremely cool. I think it could be a little bit hotter, could be a little bit colder. I don't know. But I guess what I'm arguing is if it comes in a little bit cooler, I don't think you're going to see the market react maybe like you did in the past, because I think one, volatility is low, implied volatility is low already. And I think the Fed is still going to go through with another rate hike, like they said they do. Now, if it comes in hotter, I think there is a recipe there where the market could shoot down because of the hotter job report, and maybe volatility picks up and therefore driving the markets lower. So that's kind of my thought on the inflation report coming out tomorrow. We'll see what happens, but I don't think it's quite as important as it has been in the past when as far as a market mover goes. One last thing that I want to talk about is Activision Blizzard. This is something that I've been talking about for a while and been keeping up. So obviously this is a merger play with Microsoft trying to buy them out. You see this huge gap up. This is because essentially, the FTC filed to block it, and Europe was basically making a judgment of what they were going to do. And this is a report that the EU approved it. It looks, in my opinion, and especially when you read experts, that this deal is going to go through. The deal is supposed to take place by June 30th. I believe the deal expires in July. But when you consider the countries that have accepted the proposal, you think Japan, Saudi Arabia, the EU, like I said, it would look not great for the FTC to disapprove it, in my opinion. They would look a little out of touch. And plus, when you see what Microsoft is doing, I think they have a great case. Obviously, they offered to license it to Sony, Call of Duty, that is, for 10 years. You've seen what they've done in the past with like Minesweeper when they bought out that. Now it's on multiple phone. You can play it on Apple, which is obviously a competitor for Microsoft. You also play it on Android. So I think they have a great case for this going through. But the reason I'm talking about this is because obviously the buyout price is $95, like we talked about before. But there is another way you can play this, and this is the way I've been playing it recently. And I don't always talk about certain trades, but I do think this one could be interesting. And that's when you look at the option market. So I have the option chain. These are the put options. And if I scroll down for this Friday, right now the price of Activision is just over $85, $85.09. It really shouldn't drop too far from 85. Mergers, how they usually work is where the buyout price is it will slowly tick up by a certain percentage pretty consistently week by week until will pause until the actual merger closes. And then it will, obviously the shareholders will get paid the buyout price. Well, so considering that the current price is right around $85, you wouldn't expect the price to drop simply. If it does, really that just means FTC ruled against the merger, and you would see a significant drop. If you look at what it was before the deal was announced, which it was announced in 20 is right here. So his announcement, I don't know if it'll go back down to 64 or if it would hang out around this price of 75, but you would see a significant drop. So we're not talking about, 30 cents or anything. It would be probably at least a $10 drop. So what you can do, you can go in and actually sell puts for this Friday. And right now, the spread, you can probably get it for $70 for each put. And then you can go in and actually purchase the put for, say 81. So essentially what you're risking here is you're risking about $400. We'll say that the put price, technically there's not a bid here. So we'll say you probably buy it for 5 cents a share. So, $5, subtract that from 70. So you're talking about making $65 and potentially losing 400. That's about, a little over 16% return. And this expires this Friday, and you're risking, if you just do one contract, you're risking $400. And essentially what you're betting on is that the FTC doesn't come out and rule against it by Friday, which I would think that's highly unlikely. I think that they'll rule for it. I don't know when, but I would argue that the chances of the Activision Microsoft deal going through is probably around 90%, if not higher. When you read experts, I feel like that's a very common percentage that I'm seeing, and I would agree with it when you start reading through the details of the deal. So most likely it's going to go through anyway. But however, that other 10%, you're just hoping that if that is true, that they rule against it, it doesn't happen by Friday. So basically, you have 2 days that they rule against it and that news doesn't come out. If it does, obviously the price would drop much lower than $81, but you could sell your shares at $81 and lose 400. So this is something I've been doing for a little while now. I thought I would just mention it because it's been very profitable. And again, as I mentioned before, in this market, we're just trying to find ways to have yield in the safest way possible. I'm not saying this is completely safe, so don't hear me incorrectly, but I do think this is a interesting trade, to say the least. So that's it. Good luck tomorrow. Best of luck.